Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. Now that's out of the way, I'm going to keep this video short and sweet because that seems to be the flavour of the month right now. And you guys seem to like the shorter videos. We're going to talk through my trading plans for the upcoming month. Bear in mind, we are now coming into March. We're going to talk about a few setups that I've taken and why I've taken them, so it gives you guys a heads up and you can potentially learn from this. And yeah, let's dive straight into it. So obviously, following on from last week we had the old comedy triangle that everyone was trading. You know, breakout, 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 and in the end, it ended up being disastrous. And you know, the breakout traders, as usual, got screwed over because we came into the macro range high. It's as simple as that. Macro range high swing failure pattern, and it was a great short trade. And you know, if you've been watching my video for, well, our YouTube channel for the last few months, we've been waiting for this level, and I've been publicly talking about it. So yeah, if you did get that trade, great, well done. You know, pay yourself some profits, stops to break even. Therefore, if we do continue to nuke down, then great, you can let that winner run, let your winners run. And if we do end up reversing here and taking out that high, then you get stopped out. But either way, it was a winning trade. And it was a good trade as well. It's a decent trade, decent pullback. So obviously, since then, we've come down over the weekend. We had a decent scalp long from this low here. And then on Saturday, we took the overall lows, coming into the golden pocket, and we've had a nice bounce since then. So this was an acceptable long. And to be fair, I don't normally trade weekends. But when I saw this happen, it was a trade that you've got to take, haven't you? So we had this. And then since then, obviously, we came into Monday, and Monday was a very, very slow day. We were just grinding. And I was openly saying on Twitter about how I'd not taken a trade all day up until we got to 2 o'clock in the afternoon. And what happened at 2 o'clock? Well, 2 o'clock in the afternoon, we got this perfect setup happen. Now, what is this perfect setup? Well, what we did is price came up, and we can see here we came into the top of a channel. Okay? And it's not a clean channel, isn't this? You know, this isn't a clean channel by any stretch of the imagination. And when a channel's not as clean as this, it's not one of my favourite setups. However, the area that we did come into was a favourite setup. And the reason why that is, if I come out of this screen and I go into this screen, we can see here we're looking at weekly naked point of controls here. So these are weekly volume profiles. Now what we can see here is we had a naked point of control. This red line here, we had a weekly naked point of control at this level, which was untapped at the point when it was created. So obviously the weekly naked point of control was created on Sunday at close, Sunday night. And then Monday we came up into that naked point of control. Now on top of that naked point of control, we also had a daily point of control, which was from the 24th, so from last week. Okay, and we can see here this Monday profile, we came up into this naked point of control. So we had two naked point of controls there. So that's confluence. So two naked point of controls, channel high, and then the icing on the cake to give it a really high probability setup was looking at the ES. We can see that the ES came up, and this is a trend line. This is actually a channel that we've been monitoring since the lows on ES. And we came back up at 2 o'clock, back in to test this channel. So we've back tested this channel while Bitcoin's coming into naked point of controls and an area of resistance, while the SPX, again, this is just the index, gapped up on open, filled the previous gap from last week. So this is the previous gap from Friday, between Thursday and Friday last week, filled that previous gap perfectly, and then left another gap on the day. So therefore, it's highly likely that that gap's going to get filled, especially when you've got something like the ES coming into resistance. So when all these things happen at the exact same time as Bitcoin coming into resistance, that is a great trigger that this is going to be a strong resistance. Now, did I know 100% that this was going to play out? No. Did I? Hell, I'm not going to sit here and bullshit you and say I knew exactly that this was going to play out, because that's not how trading works. It's just probabilities. But this is the first trade I took all week. Ignoring the trade on Saturday, because obviously that's last week, this is the first trade. So I waited most of the day, Monday, to get this first trigger. And then this first trigger, in the end, gave us a 3% move. But in risk to reward point of view, 9.4 risk to reward. Okay, so some people are going to look at this and say, well, it's only a 3% move. It's nothing. It's nothing. What's a 3% move? That's naff. But the reality is, take it from a risk to reward point of view. If you understand risk management and you understand how to position size correctly, this ended up being an absolutely cracking trade. Okay, so 9.4 risk to reward. Therefore, if you risked $100 as an example, and you're stopped, so if you ended up being stopped out, you'd have lost $100. But if you rode this down all the way to take profit, then you actually got $940 in return. So that's how risk to reward works. If you want to understand this more, then you need to come check out our website, okay, where I teach the very basics like this in the starter modules, in the beginners modules, okay. So this ended up being a very, very good trade in the end. Now, this trade wasn't just taken by me, it was taken by many in the group because I was sharing it in real time. So we can see here, in real time, I was talking gap up on the SPX while ES is backtesting the channel. And we can see here, ES was backtesting the channel. Now, ignore this red squiggly line in the background because this is a fractal that we've been watching for quite a while now in the group. And so far it's playing out nicely. So obviously if you guys want to see what that fractal is, then you need to come join Spitfire traders. And at the time, I'm saying, the MPOX, I've taken a scalp short. So I'm telling the guys in real time, I've taken a scalp short. So we can see here, we can see the naked point of controls on the screen here into this channel high, and I've taken a scalp short. And initially, my target was just looking back down towards the VWAP. But in the end, it played out even better. In the end, we came back down to the channel lows, and then we went further down through that. And what was nice to see is some of the other guys in the group, we zoom up here, taking the same trade. Let's see if we can find them in here. Somewhere down here, you can see the guys have been absolutely smashing it recently. There we go. So some of the guys taking the same short setup. You know, it's great. Absolutely great. So it ended up being an awesome trade in the end. But this is what I want you guys to learn from, is the fact that we don't have to be taking trades within these other areas that don't have a high probability of playing out. But when you get a trade as perfect as this that plays out, when you've got both Bitcoin and the ES coming into resistance at the same time, and the gap fill that's potentially going to happen on SPX, you know, the stars are aligned. And I know people joke about technical analysis and astrology, and that's just a bit of a joke. But there you go. So this is what I mean. Right, now that's out of the way. Next on the agenda is let's take a look at this week's video sponsor. Now, this week's video sponsor is PrimeXBT. Now, if you don't know who PrimeXBT are, this is the platform that I personally use to trade FX and stock indices. But you can also trade crypto on here as well, and commodities. Now, the beauty of these guys is you can use crypto as collateral. So if you deposit USDT or Bitcoin, you can use that then in turn to trade FX pairs, for example, or commodities or stocks. So, for example, I'm currently in a swing short on the S&P, and I'm using USDT as leverage on there. Okay, so obviously if you guys want to check them out, there's a link down in the description. If you use our codes, there's one code that will get you up to a $7,000 deposit bonus, and the second code will get you 25% off trading fees. So not a bad deal in the end. Likewise, obviously, if you guys want to learn and get real-time updates about these kind of entries, then come and check out our website. Let's see if we can get it on the right screen. There we go. Come check out our website, spitfiretraders.com. Links down in the description. On here, you've got access to our Traders Discord, which is our free Discord. Now, this isn't where I have my trading plan channel, but you've got access to a hell of a lot of free alpha in there, you know. And then, obviously, if you want to take your learning to the next level, then come check out our TA course. And if you want to know what's in our TA course, with all the 80 hours of video content, then check out the video library section, and you can see exactly what's in there. Okay? So we've got everything from odd flow analysis through to Elliott Wave, trading psychology, altcoin strategies. Yeah, there's so much in there, it's unreal. Yeah, so obviously if you do want to learn, then it'll cost you the grand old price of $60 to get access to all this. Okay, so next, moving on, let's take a look at what we are looking for next. So obviously the macro range, no change. The macro range, we are still in the same range. Still high time frame range. Obviously, we've swing failed the top. We've got the lows. We've got the deviation at the bottom. And I'm still, until this breaks, I'm still more than happy trading this range. Okay? So you guys know the plans. It's the same plans as I shared last week. So obviously either on a high time frame coming back down towards the EQ, which effectively could take out these lows here as a liquidity sweep and back up, which would look effectively something like this. Reclaim, and you're trading the top part of the range, the top half of the range, or we have another stab at the highs. Come back in, deviate, and you got another short trigger. Or if that doesn't happen, then we're looking back up at these outside deviations of the range fib tool, just like what happened down here. Okay, so that's macro. But if we zoom in now, let's get rid of this range and let's zoom in, and we'll zoom into let's use the 1 hour chart, and let's take a look at what could happen from here. So this is what I'm looking at locally. So locally, if we zoom out a little bit more, we throw it on a volume profile, and there we go. So we can see what's happening locally. So either we get a pump from here, and we come up into this region here around the value area high, which is roughly around 24.2k to 24.4k. If we get a decent reaction there, then I'll be looking for fresh shorts. Now, if it gets above there, then my eyes are going to be firmly back on the range highs. Now, did we get another deviation of the range highs, or does it come out to one of those outside deviations? Again, that's more of a macro play. We're talking lower time frame here. Now, on the lower time frame here, then we could be looking at another test of this point of control. However, we have tested this point of control several times. So likewise, if we do come down here, then what we could be looking is we could be looking at a deviation of these lows entirely coming into this value area low area, get a change of market structure, and then you've got a long trigger. Now, you've got to be aware of this point of control, because if this does happen, then this point of control then becomes resistance. Okay, so it would be a very early take profit one, stops to entry, and then that way, if it does roll over, you've still profited from that trade. Okay, now below that, if that doesn't hold, then once again, like we've said, then we'll be looking at this consolidation here. Now, if we throw on that macro range tool again, we can see obviously this is the back test of the EQ. So if it does end up coming back down here, then we can either look for a reaction around the EQ, or maybe grab the liquidity from underneath it, and then you've got another long trigger there. Okay, failing that, if that doesn't work, then just continue to play the overall macro range. You got your macro range low, you got your EQ, and you got your macro range high. They're the three most important levels on a macro time frame right now on the chart. Okay, so if you don't have them on the chart, then pop them on the chart now. Right, that'll do for today. If you've enjoyed the content, if you learned something, smash that like, let us know down in the comments. And until next time, as you were, bye-bye.